Okay, non-direct and direct recognition has been a little bit since we went into some details on this topic, which is always fun. I remember the early days when I was learning about this. Hey, is there really a difference? You should only go with non-direct recognition. And then the direct recognition companies would say it doesn't really matter, or some companies pay a higher dividend rate, all that fun stuff. The short answer is it really does not matter when you look at actual history, not projections and illustrations, but what has actually happened doesn't make a huge difference. But in this video, we are going to provide an overview on non-direct and direct recognition. Let's get into it. So we are going to assume a policy with a non-direct recognition company. We're just going to assume a 6% dividend rate, and then a direct recognition company with the same 6% dividend rate. To keep things simple, we're going to assume $100,000 in cash value. I borrow out half of it. I want to see the impact of that $50,000 loan and how it impacts my policy and how the insurance company recognizes it, whether they directly recognize the loan or if they do not recognize the loan. Non-direct and direct recognition has directly to do with policy loans. So let's take a look here. Let's begin with non-direct recognition because this is the easiest one to understand. Direct gets a little bit more complicated. So to begin, let's assume that we've got our cash value at $100,000. If I don't touch it and my company, the insurance company I'm with, is paying a 6% dividend, what's going to happen? I'm going to receive a 6% dividend on my cash value. If I elect to borrow out half of it, so here we've got $50,000, we loan out $50,000, what happens is the insurance company is going to collateralize my death benefit dollar for dollar. Goes from $500,000 down to $450,000. Now, the insurance company will continue to pay a 6% dividend on the full $100,000 as if I never touched it. Another way to explain it, that 6% dividend is applied to the remaining cash value or equity, if we like to use that term, and also a 6% dividend is still being applied to the loan balance. Technically, it's still on the $100,000 as if I never touched it in the first place. How the insurance company does that: one, they collateralize my death benefit, and two, there is loan interest. So with most non-direct recognition policies, you will see a variable loan interest rate, typically with a floor of 5%. So at $50,000, that would come out to $2,500 in loan interest, which would go to the insurance company, does not go back to myself. So really what I'm interested in is with a non-direct recognition company. If I borrow and then repay, what is the impact that it has on my policy? Well, let's pretend that if I just let that money sit and grow, maybe I was paying into it, maybe I wasn't, in 10 years, I was going to have $200,000 in cash value. And if I loaned it out and repaid it in full in that 10-year time period, I would see that my cash value would be fully restored to exactly what it would have been as if I never touched it in the first place. The insurance company does not recognize the fact that I borrow from the policy and they continue to pay dividends and interest on my entire bucket of money. Another way to put it is that there's no lost opportunity cost. My money keeps on compounding for me. You will also find in this situation that one's death benefit would be restored to $500K. And if that was increasing, it would be higher than that as well. So that is non-direct recognition. Let's take a look at direct recognition. So cash value, $100,000. If I just let it sit and grow, I'm going to receive that 6% dividend rate. Now in this example, I'm going to loan out $50,000. What a direct recognition company will do is recognize the fact that I take out a loan and adjust my dividend on the borrowed portion. They still will often pay dividends on the full $100,000, but it's not going to be in the same manner as non-direct recognition. Let's go into a little bit of detail here, how it would work. It's like this. If the company's dividend rate is 6%, that is still applied to any untapped cash value, unborrowed funds, remaining equity, call it. There is still a dividend paid to the loaned portion, and this depends on the company and how they work. Here's what I'll say. Some companies will pay you a dividend rate. So for example, I might see a 6.5% dividend, whereas some companies will pay a lower dividend rate. They say, hey, you borrowed, so we're going to apply a 5% dividend to borrowed funds. This is where it is important to understand the different insurance companies, what they offer, because if we're planning on using our cash value heavily, it's good to be aware of that. And a lot of times you can project this out based off the guarantees, non-guarantees, all of that good stuff to give you a sense of what it would look like. That's what we like to do, so we can see everything up front. So good to be aware of that. What we would see here, same example, if I just let it sit and grow, my cash value might be worth $200,000 as opposed to the loan and repay scenario. Here's what I might see. Depending on the company, could be worth 205 or it could be worth 195. Whether or not they elect to increase or decrease my dividend payout on borrowed funds. I should say whether they recognize it and then increase or to decrease it. The death benefit and how it is collateralized will work in the same manner. You do see 6% fixed here. As a quick side note, you will find most, not all, but the majority of companies that offer direct recognition do have fixed loan interest rates associated with the product. Typically it's at 6%, but not all the time. And again, we're not going to go into details on insurance companies in this video, but it's good to be aware of that. So I hope that you found this helpful. Reach out with any questions and we'll talk to you soon. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.